Njoroge. I am head of growth and co-founder at Mosmos. And what Mosmos is a save to buy platform that enables customers save for items that they would like to buy. Mosmos is accessible. Mosmos is accessible in two ways. We have an online marketplace that is on our Mosmos app, as well as partnering with retailers countrywide to enable their customers to pay using Mosmos for items that they would like to buy in store. So what we do is that we enable customers to sort of slowly pay for items that they would like to purchase with doing flexible installments. So that would be anything between 60 to 90 days, but sometimes even more. The whole point of Mosmos is to enable customers to pay within their means. So matching their income patterns. We have customers who pay daily, small amounts daily until they achieve their goal. We have customers who pay weekly, monthly, that way until a customer is eventually able to make their purchase. So Mosmos actually started as a very small platform that enabled customers to buy mobile phones. We just started with mobile phones. At the time, this was about 2 years ago, buy now, pay later had really picked up, and we had already started seeing signs of customers being unable to make their daily payments and keep up with the interest charged. And so what happened is that we just started Mosmos, enabling customers to save for mobile phones, and even up to date, we see mobile phones being, the top sellers in our marketplace. Kenyans are always buying mobile phones, and so enabling customers to just save. We call it pole pole, which means slowly towards their purchase. And as soon as a customer starts paying and they can see that their money is not disappearing, the money is not going anywhere, they make slow payments starting with as minimum as 100 shillings. Then that's how Mosmos really took off. So we started with mobile phones, and then we went to slightly more expensive items, that is home appliances. And then just that way, in the last 2 years, given customer feedback and the type of items that customers would like to buy, we have continued to expand our offering. Mosmos is the other way around, where the customer will receive the item at the end. There is no interest charged, and because this is a savings platform, the barrier to entry sometimes with buy now pay later is the KYC, where either customers don't qualify for credit because maybe you have a poor credit score, and so there's no credit checking because it's a savings platform. So even signing up onto Mosmos is very simple. All we need is your name, phone number. If we're doing delivery to you, we need your location details, and then you get started. Start making as little as 100 shillings, and make your payments all the way towards completion. Once completed, depending on if you got the item in store and you'd like to go and pick it up, that's totally fine. If you bought on the Mosmos marketplace, we also do countrywide delivery. What happens is that on the marketplace, we source products at wholesale price and sell them at retail price, and so the difference is our revenue. So essentially, we make money when a customer has completed their savings goal, and then in store with our retail partners, we've negotiated a commission with them off of the value of the sale item of the sold item, and so it is also within our best interest, as well as the merchants, that we encourage customers to make savings and eventually complete their goal. So trends, certainly, and this is feedback that we receive even on a daily from customers and people that we use as agents. So in store at store attendants would also work as Mosmos agents, and what we've seen is customers being very aware, increasingly more so, of high interest rates. So buy now pay later, whereas maybe 2-3 years ago it would be like, oh, definitely, I get this phone today and I pay for it over time. More and more we are seeing customers being more aware of high interest charges, and that's being very cognizant of that inability to pay for this product down the line. And so then the preference for saving, right? If it's not an emergency and I don't need this item, which very often, with home appliances, mobile phones, it's a lot of times it's aspirational items. If I don't need it today, I might as well save for it and buy it in a sort of financially more responsible way. Is something that we've definitely seen, and of course, yes, we like that, because that is what we are offering to our customers. And in terms of projections and growth, we've done a lot in terms of customer education for save now, buy later. Why would you want to save now? Why wouldn't I just get the item on credit and pay for it over time? One, with the current market conditions, we are starting to see just a shift from an initiative from customers just preferring to save and avoid interest charges. And so what our goal is and what our vision is to be the home for savings, any item that you'd like to save to buy. As we've continued to improve our product, we've also started, we've also just recently introduced goal-based savings. And so this is, if you want to save as a parent towards school fees, with the type of partnerships that we're also exploring, say saving for, school textbooks and items like that. So goal-based savings, and this goal might look like, maybe I want to buy a car, maybe I want to pay for my children's school fees, and so just being the home of all goal-based savings, if that be a physical item, if that be an experience, if that be a service that you're saving for, insurance, etc. That is really our goal and what we're working towards as Mosmos. And also feedback that we've been seeking from our customers from the get-go of why they would prefer to save with Mosmos versus a bank, for example. And what we've seen, especially in this market, is that banks, they've done a lot and they've come a long way, but still do not seem like a friendly institution. A lot of the perception, even with our young customers who completely understand banks and they've grown up with the advent of online banking, still see banks as either a wallet, right, where I get paid through and I instantly start to debit. So they don't really see it as a savings platform, and then also that the issue of banks seeming inaccessible, right? So not very easy to reach. Even something as little as calling a bank to find out you're in a waiting line for 25 minutes. So that's definitely something that we've seen while even getting feedback from our customers, and that is why they prefer different types of apps that they've seen grow, that they've seen established, and referrals also works a lot, especially in money and finance apps. So a friend tells you about Mosmos, oh, you got this item through Mosmos, and you're most likely to use it. Banks will always be there and they will certainly always be useful, but what we've seen is that customers really leaning more towards institutions that they can relate to, that be it language, if I was referred to from a friend, and of course with different finance apps comes innovation, right? Save to buy, save and interest. Interest is even broken down to layman terms. What do we mean by interest? What do I expect to get by the end of the year? So some of these gaps, I think banks have not really been able to fill, and that's why customers are turning towards different type of financial solutions. My personal motivation also comes from being an entrepreneur, building a product that works. So I'm head of growth, so I interact a lot with our customers. I interact a lot with partners for whom we are solving a business problem as well. And so just being able to build a product that works, that you can get feedback on fairly quickly and iterate and continue to build. And it's certainly very, very rewarding when you can see customers use your product and they like it. And we have a lot of repeat customers as well. As you can imagine, for a financial product like ours, when you're quite young and less known, customers are very hesitant. But when they use it for the first time, and they see, okay, my money is not disappearing week on week, okay, my balance is still increasing because I've been depositing, and eventually I do get an item. So then they are very likely to come back, give us feedback, be more open. And what we've also seen is a trend is that a customer would come save for a mobile phone, then they've progressed to an appliance, and then they progress to larger ticket items, and they're happy to see us when they walk into a store in a mall, for example, and they're like, oh, Mosmos, okay, I know this one. And so it's as someone who within my role I interact a lot with customers and partners, it's certainly very rewarding to be able to provide a solution that works for both. I would say the thought has always been there, and I've worked a lot, I would say the last 4 or 5 years in very, very early stage startups. And so by working very close with founders at very early days of the business, I think that also gave me the confidence of, okay, this actually can be done. It's not like people with super knowledge, build businesses. It's a skill, and it's sort of like that grit really that gets you through the tough seasons. And so I would say working very closely with founders sort of give me that confidence. But I certainly think I always wanted to build something, just okay, it's not the right time, and having a bit of fear, and then eventually last year I kind of took a plunge for it. Yeah. So we found out or knew about Catalytic Africa through one of our lead investors, NIBAN, Nairobi Business Angel Network, who was one of the investors in Mosmos, and they were very, very instrumental in helping us learn more about Catalytic Africa and told us about this opportunity. And I would say the process was very friendly because, when applying for non-dilutive funding, as funders, immediately you think, okay, this is going to be a long, drawn-out process and lots of paperwork, but that was not the case. So very quickly we started conversation with Catalytic Africa, and there's some certain checks that they wanted, that they were also very supportive in helping us sort of fulfill those very clear next steps. This is what we need, give them the necessary documentation, and I would say the process went fairly fast, at least from what I expected. It was not a long process, not long drawn out process at all. Everything was online, very minimal manual paperwork, and very easy to communicate. Sometimes when doing these kinds of applications, you basically feel like you're speaking to a wall, but it was definitely not the case. Not the case with Catalytic Africa. The application process was fairly straightforward, knowing what's needed, if you qualify. So working together with NIBAN and thereafter ABAN and unlocking the Catalytic Africa funding was, I would say, a very, very smooth process. Yes. So we are under Antler, which wasn't a hub. So they registered as a hub, and now we were working very closely with them, or at least ABAN giving us, or Catalytic Africa giving us direction on, you should be registered with a hub. Then Antler registered as a hub, and then now we were able to unlock the funding. So what we have definitely seen in the last, I would say in the last year, in as much as we have grown and we still continue to grow, for a financial institution like ourselves, digital customer acquisition is very uphill, right? Relying on only digital platforms to let people know about your platform and that they can also trust it is very uphill. And how we've also been able to unlock, a lot of growth in a fairly short period is because we've been using on-ground agents. So as I mentioned before, we work with retail stores, and the retail store attendants who work in store work as Mosmos agents, and those have been very key in onboarding customers, because a customer needs to understand, okay, save to buy, what does that mean? I'm saving, then I'm getting my item at the end, but how do I trust that you have my money and I'll get an item at the end? Okay, what is the KYC, etc. And so what we would definitely use a big chunk of the funding for is being able to just enroll a lot more agents, because on the agent side it is also a job for them, right? And so with every customer that they're able to onboard, there's something in it for them, and we have seen this work very, very well. From the minute you onboard an agent and you ensure that they understand how Mosmos works, they are very quickly able to onboard customers who also understand how the product works, and that is also very key for us, because we're certainly looking at outside of urban area expansion. What we've seen is even with a lot of financial institutions, it's very easy to start and grow in urban areas, but then the underserved communities outside of urban areas still get overlooked. And so working with agents to enable us to spread word about Mosmos and onboard customers outside of urban areas is certainly a key growth focus for us. We are looking at around 100,000 users onto the Mosmos platform, and then with those at least a conversion of between 10 and 20% active users per month. Yes, and with that we've been able to see that opportunity, and we've been able to even unlock that, but mostly within urban areas. But it is certainly a lot of our customers, I would say about 25% of our customers come from Western Kenya, which was very interesting for us. And we realized, one, because outside of urban areas, customers don't really have a lot of options, right? Because everything is focused within Nairobi, Mombasa, Kisumu, etc. And the ability also for us to do countrywide fulfillment has definitely been one of the things that customers appreciate. So not only are they able to access products that they can't typically find in Western Kenya, we are also delivering it to them is something it's greatly appreciated. So yeah, certainly Western Kenya is somewhere we want to just be on ground, have people who are able to actually answer customers' questions, etc. Yes, certainly I would say one for very early stage startups, and even not just early stage, just knowing the funding environment currently, it's become progressively tougher and tougher to raise funds for businesses that are making impact, for businesses that are either near profitability or are working their way towards profitability. I would say fund matching, when you've done the groundwork of speaking to investors, you've been able to raise a considerable amount of money, and being able to unlock such funds certainly makes it easier for us. It's been a game changer in terms of our runway, right? We already had projections, but being able to unlock this gives us even more breathing room when it comes to our runway, and also we are able to now start, especially as I mentioned, with like on the ground agents. We can actually now do it simply because of this matching fund, something that would potentially have taken a longer time. When we're looking to expansion, we are certainly looking at like cheaper ways of doing it. That's where digital comes in, but of course it has its weaknesses, right? So now having a fund matching just like this is I mean it can only be good, right? Because more breathing room, you can be able to experiment more. There's always some areas in business where you can see potential, but the resources needed for it is not something that you can afford right now. So that is always pushed to the back burner. But now we can take a bit more risks, and in areas where we've suddenly tested and proven sort of proof of concept.